Behind closed doors of global finance, a quiet takeover controls trillions in capital. Wall Street giants silently orchestrate asset moves, reshaping modern economic power forever. Asset management cartels hold shares in nearly every major public corporation today. Their voting leverage dictates corporate governance, board decisions, and global market directions. When panic strikes traditional stock markets, these institutional giants buy distressed assets cheaply. Economic turbulence becomes their primary mechanism for acquiring sovereign wealth. Understanding this institutional playbook reveals who really owns global infrastructure. Control is no longer about owning factories, but commanding capital allocation worldwide. Monopolizing global equity requires sophisticated risk engines processing market data constantly. Predictive algorithms identify vulnerable sectors, executing strategic buyouts seamlessly. Housing markets, energy grids, and digital infrastructure are quietly transitioning to asset managers. Passive investment flows concentrate economic control within a few boardroom tables. The scale of this capital management exceeds the gross domestic product of nations. Sovereign governments increasingly rely on these asset firms to manage national pension systems. Regulatory frameworks struggle to keep pace with institutional capital consolidation. Private trusts and index funds shield ultimate voting control from public scrutiny completely. Boardroom votes are executed quietly behind non-disclosure agreements and proxy votes. Single investment institutions control major voting blocks in competing global corporations. Risk management platforms process real-time financial telemetry across every continent. Algorithms analyze sovereign debt stability before human fund managers make final allocations. Global supply networks and major maritime shipping lines depend heavily on private equity funding. Critical infrastructure assets generate predictable yields, securing stable, long-term institutional returns. Capital concentration alters market competition across major consumer sectors globally. Independent corporations must accept aggressive buyout terms or face hostile, targeted institutional short selling. Physical gold reserves and tangible hard assets underpin modern sovereign portfolio protection strategy. Institutional vaults maintain essential physical liquidity during volatile international monetary shifts. Access to elite financial networks requires absolute discretion and private capital backing. Exclusive family offices partner with global asset cartels to preserve substantial generational family fortunes. Executive leadership moves between sovereign wealth funds and private equity firms constantly. This steady rotation of financial leaders solidifies institutional policy control across global economic markets. Market downturns trigger predefined capital reallocation protocols automatically across major funds. While retail investors panic sell, institutional algorithms absorb prime discounted assets cleanly and efficiently. Corporate takeovers are executed through structured debt instruments and private credit lines. Shadow banking channels allow rapid capital movement outside standard traditional international banking regulations. Quantitative risk engines evaluate complex geopolitical risks long before public announcements occur. Portfolio hedging strategies insulate institutional capital from major, unexpected international market crises. Residential real estate markets experience unprecedented institutional capital penetration today. Entire single-family home developments transition into profitable, perpetual corporate rental property portfolios. The consolidation of financial media outlets controls dominant economic narratives during downturns. Strategic communications maintain investor confidence, while major capital reallocation proceeds smoothly without panic. Mastering institutional capital dynamics is essential for modern high net worth strategy. Understanding how global cartels allocate wealth allows elite investors to protect and compound portfolios safely. Lobbying networks ensure legislative policies favor institutional asset accumulation strategies. Tax structures and corporate laws are optimized for large-scale, highly efficient private fund management operations. Smart city developments and industrial zones receive direct private equity financing worldwide. Institutional capital defines urban growth patterns, commercial real estate projects, and strategic trade hubs. After trading hours, global liquidity pools rebalance trillions in electronic assets quietly. High-frequency algorithms route orders through private dark pools far away from public market exchanges. Ultimate economic control resides with a small council of senior managing directors globally. Strategic decisions made in private boardrooms influence major global market trends for upcoming decades. Offshore holding structures and international trusts provide absolute legal asset insulation. Multi-jurisdictional tax optimization strategies preserve capital compounding smoothly across multiple generations. Data vaults contain confidential shareholder records and proprietary algorithmic trading models. Strict data security protocols rival military installations, protecting vital institutional market intelligence. Hostile buyouts are structured using leveraged credit facilities and targeted stock accumulation. Target companies yield control long before public tender offers are officially announced to markets. Penthouse boardrooms host discrete summits between central bankers and private fund managers. Strategic monetary alignment ensures systemic liquidity during severe, volatile global market events. Global banking headquarters serve as central nodes for international capital clearing networks. Digital ledger transactions finalize ownership shifts across large global corporations on a daily basis. Financial media commentary aligns precisely with major institutional market positioning shifts. Public narratives encourage retail trading patterns, which provide vital institutional liquidity during volatility. Commodity markets, including energy, agriculture, and metals, are controlled by futures contracts. Institutional trading desks dictate spot prices for critical, essential global resources worldwide daily. Legal teams draft complex corporate restructuring frameworks to bypass antitrust scrutiny smoothly. Strategic divestitures allow continuous expansion into emerging, highly lucrative technological monopolies. Armored asset transports move physical collateral between central vault facilities securely. High-security transport networks ensure physical liquidity directly backs major international credit arrangements. Sovereign wealth funds coordinate directly with top asset management cartels worldwide. Co-investment deals secure critical strategic resources, telecommunications networks, and primary national power grids. Central control rooms monitor real-time economic telemetry, trade flows, and currency shifts. Instantaneous risk adjustments prevent severe portfolio losses during global systemic financial shocks. Financial capital cities operate interconnected networks of deep institutional power and control. Decisions executed in New York and London cascade through global financial markets instantly and completely. The institutional playbook rests on absolute patience, discipline, and systemic capital control. Strategic foresight ensures dominance over emerging growth markets and vital global infrastructure assets. As traditional markets evolve, algorithmic asset management tightens its firm economic grip. Position your private capital strategically alongside institutional money to navigate coming systemic shifts. The architecture of global wealth control is fully operational and expanding daily worldwide. Dominating modern finance requires understanding the silent mechanisms driving institutional power and influence.